the biggest paradigm shift that we had in modern times. I think that up until now we've been evolving in a certain paradigm, the same paradigm, the hierarchical society, the world where we have to rely on intermediaries, where we have to rely on trust between certain parties to a transaction. And I think that today we're advancing into a more horizontal view of society. I would say that blockchain is a derivative of this paradigm shift, and I think it represents the big change in the way we view the manner in which our society and economy needs to conduct itself. So I would like to just briefly present some big developments that happened recently. Vanguard, which basically invented index funds, one of the biggest investment firms in the world, is testing a peer-to-peer FX platform on the blockchain. The Stuttgart Stock Exchange launches a digital assets exchange fully regulated by the German regulator. Wells Fargo launches own digital cash system on the blockchain, and it goes on. And you see even the shipping giant Maersk launches a shipping system on the blockchain in Russia. So you see many traditional companies venturing into blockchain, and this clearly shows that this is not a hype or a bubble. We're already past the bubble stage. The bubble has exploded, and I think that now we're in the constructive building stage of blockchain and of the use cases that can be built for the long term. So, a digital economy. I think that today there is a big, and we will talk about obviously sustainability, there's a big shift towards sustainable markets. And what a digital economy allows us to do through tokenization and through the digital representation of offline assets, commodities, rights, is to get rid of a lot of grunt work that we're used to doing, and therefore through innovation to allow for greater efficiency, which will, I think, in turn increase the productivity. And the way the economic machine works, we can never know what will be the long-term consequences of that. But I think in the short term, we'll experience, at least in the countries that are prone towards innovation and the economy of ideas, we will experience a growth in productivity. I think the main why of this is to simplify. The way I see it, almost every product or service that comes into the market today has a main goal, which is to simplify the previous version of what it's doing, or to enable a new way to do something that wasn't previously possible. And it's amazing to see how simple everything is. Everything we need to know or do is within a tap away in our smartphone or whatever. And I think that's the main, we're living in the age of simplification. And I think that a simplified economy means that we're cutting out unnecessary parties to that economy, like intermediaries. We're moving towards a peer-to-peer transaction model rather than an intermediated transaction model. And for me, innovation means simplification, and simplification allows for greater sustainability. When we simplify, we basically consume less of the things that we're used to consuming that are impeding our efforts for a sustainable life and planet. I think that token economy and blockchain is lowering the entry barriers to the financial markets. ICOs were a failed model, but I think that the idea was brilliant to allow for easier access for startups and SMEs to finance themselves, not through the VCs or private equity firms, but directly from the company to the investor. And if this is regulated properly, I think that this will become the main way for SMEs, at least, and startups to get financed. So, alongside with that, I think that blockchain or any other trustless transaction infrastructure can allow the democratization of not only money but also information. Today we are living in a world where our view of the world is dependent on the information system that we are viewing. If you are watching Fox News or CNN, your worldviews will probably be dramatically different. And so our worldviews are based on the framing that we are presented with. And I think that's a big problem today in our society. And I hope that, I may be being a bit over-optimistic here, but I hope that with the help of greater transparency and technologies that allow for greater transparency and immutability, like what blockchain allows for, it will be harder to mask the truth. And I know the truth can be a very subjective term, but I believe that this will be another consequence of the horizontal society or the development of trustless transaction infrastructures like blockchain. So I want to talk about SDG 16, Peace, Justice, and Strong Institutions. I'm sorry for the small font, but I'll read it to you. So I think that today we're seeing some countries are trying to combat corruption and combat the fact that in some developing countries it's very hard to trust institutions. Through blockchain, it's easier for people to participate, it's easier for people to access and to speak their voice, and it's harder, again, for the governments and institutions that would like to mask what the people are voting for. It will be harder for them if blockchain is used properly. Digital identity on the blockchain. I think that, again, and this also relates to anti-money laundering. I think that the only time where cryptocurrency or where cryptocurrency ecosystem will become an alternative banking system is when we could attach the digital identity of the sender and receiver to the wallet. Until then, we're going to face a lot of fear from general global institutions and governments. And unless we can attach inherently the identity of the person to the wallet and compromise, of course, the anonymity, I think that's a very important factor for cryptocurrency ecosystem to become a viable alternative banking system, payment system. Central bank backed virtual currencies. So yes, I think that if you can't fight them, join them. I do see all of the countries all over the world, the countries that maybe are within the scope of understanding the advantages of blockchain, issuing central bank-backed virtual currencies. This can revolutionize the way countries govern and perform surveillance on their payment systems, on money laundering. Of course, when you have everything on the blockchain, and as hard as it is to think about it right now, but I do think that it will be much more efficient than the current banking system means for surveillance and development, as well as land registries on the blockchain. In Israel, right now, we're moving the land registry to the blockchain. I know this is happening in some African countries even. So again, big problem there with transparency, big problem with performing changes in a fast and efficient way. And of course, smart contracts, which is just a tool to facilitate all of this. So you can't really regulate blockchain. Blockchain is a technology, not a use case. And again, blockchain maybe is temporary. That's why I like the Liechtenstein's approach. They are allowing for the inclusion of other technologies that might pop up that are also have a similar proposition, which is trustless transaction infrastructure. So trustless transaction infrastructure means that you don't have to trust the other party in order to commit to perform a transaction with them. So blockchain regulation can only serve as a gateway to applicable laws according to the use case and set security standards. Token regulation should be focused not only on AML. So again, as I said, I'm working with a lot of jurisdictions. And from what I'm seeing today, up until now, the focus has been on anti-money laundering. And this is so narrow. And you know what? The end user doesn't really care about anti-money laundering if their money is stolen because the exchange got hacked or anything like that. So anti-money laundering is important, yes, but when you're speaking about the end user and the user experience, this is not the most important thing. And you have to set standards for the quality of everything that is being performed within the service provider, not only the money laundering, the fighting money laundering. So I will talk about this in 1 second. And the token regulation should be as flexible as possible due to paced developments, of course. And as I said, Liechtenstein's Blockchain Act allows for future technologies with a similar proposition. We're moving very fast. 1 year in the blockchain world is like 5 years in the normal world. And of course, the regulator is always lagging behind. So I think that the approach that Liechtenstein took is a very smart approach. And it's not only the buzzword, we're technologically neutral, it really is technologically neutral. And I think it's smart. So another thing that is special about the Liechtenstein's approach to blockchain legislation is that it focuses on civil law as well as the oversight of the service provider. So if you take Malta, for example, yes, they set quality standards for the team, the project, etc. But there's no focus on civil law, and this is very refreshing, and I think this is very called for. So there is also an attention that Liechtenstein gave to the relationship between the token, which is the online representation of the asset, and the offline asset. So if I say that I have a token that represents a certain portion of a real estate asset, who is going to check that? Who is going to appraise that real estate asset to see that it's really there? So I think, and also the Liechtenstein Blockchain Act set a very significant capital requirements for the people who want to perform those actions. So I think that's important. Also, in blockchain acts up until today, no capital requirements, no significant capital requirements. And a capital requirement is meant to ensure that the company is not only saying they will do so and so, they also have the means to guarantee that their consumers are not hurt. And again, the significant amounts that were set by the Liechtenstein Blockchain Act, I think it's very important not to just say, okay, we have a capital requirement, it's like 10,000 or 15,000 euros, but to make it significant so that the company will be well established and not just a small company that doesn't really know what it's doing and wants to handle people's money, assets, and so on. So I think the act, the Liechtenstein Blockchain Act, sets very extensive requirements for the internal control procedures. It covers many aspects of it. And therefore, I think that the broad view that it is taken is more similar to the traditional financial laws that we have. Up until now, I've only been seeing sort of very specific blockchain legislative approaches that don't understand that in the end you're dealing, again, with people's property, money, assets. And so you have to be as broad as the financial regulations are to properly regulate it. That's it. Thank you.
Thank you so much, Aviya. Now over to you, Thomas.
Thank you very much. So, we already heard that we started the work group in 2016. Back then, we had already some blockchain projects in Liechtenstein. And the Liechtenstein approach was that we analyzed not only the potential of this new technology, and because we saw the huge opportunity to foster innovation with the support of that technology. But when we analyzed our legal framework, we also, because we wanted actually, as Thomas already pointed out, to really foster innovation, and we had this picture of the token economy in our mind, where we have a lot of assets which are actually at the moment not tradable, will be bankable and tradable. So we said, okay, what do we have to do? And one thing was that we found challenges as well. And one of the challenges I want to talk about now is anti-money laundering, know your customer, and combating the financing of terrorism. And this was not only because it was pretty clear that if we think that this technology will evolve and that we'll see more and more adoption of that technology, and it's more a topic of digitalization of the financial markets on the one hand. It's not only about that, but that's one big thing, I think. We said, okay, there will anyway, for sure, there will be requirements, and you have to comply, and you have to amend your framework, because what we found actually is that there might be some potential loopholes in our existing frameworks. So we said, what do we have to do? And actually we asked the industry back then already, and they told us that they comply with, voluntarily actually, with KYC, AML, and CTF. And the reason why they did that is that in the end, if you start, for example, you do a fundraiser, so you collect assets from investors. In the end, you need to have a bank account, and nobody will bank you when you don't have like the source of funds. So what we saw in Liechtenstein, that a lot of the industry, they're anyway complying with KYC, AML, and sanctions. Yeah. So if you have that big picture in your mind, where we say, okay, it's much more than only regulating intermediaries, because there's this new development, this ICO hype, where you can easily raise a lot of money, and a lot of projects globally, they didn't care about being compliant, they didn't care about AML, they didn't care about KYC. And these, all of them, I mean, they're facing tremendous problems now to use these funds they raised. That's not a question if they're legit or not, that's a different story. But we said, okay, what do we have to do if we think about this token economy? And if we think about that, part of it would be that we have that model that Thomas Dünzer already explained, that we have this amazing new idea that you can use whatever right your existing legal framework recognizes, you can let the token represent that right, and then you can make use of this technology, and you can easily transfer it. It's way more efficient. So it was for us pretty clear that we said, okay, what do we have to do to provide legal certainty? And it was already referred to the civil law. It was not mentioned that we amended our corporate law as well. So now we have dematerialized securities, but we also amended the Due Diligence Act and the Due Diligence Law. And what is crucial and what we did differently, I think, is that we used the same approach there. So we didn't say, let's just put everything under the Due Diligence Act. So everything is, you have to follow compliance rules. We analyzed the service providers and we said, okay, which service providers should fall under the compliance, should fall under the Due Diligence Act. And in the meantime, we saw that the 5th AML directive already covers the exchange services. So if you exchange virtual currencies and fiat under the 5th EU AML directive, you are already covered. Custodian as well. So if you have tokens in custody, or if you exchange them, this is applicable. Just to mention two, the other one was FATF recommendation. So actually regulators globally have to think about regulation in that respect. And so it's good that we started from the beginning to think about how we should implement KYC, AML rules in our framework. And as I said, we have 10 new service providers invented. And we said, okay, which one? I mean, first of all, I think it's very important to know that every of these service providers, they have to get registered with our Financial Market Authority. And the question if the Due Diligence Act is applicable, we analyzed all of these service providers and said, okay, does it make sense? Do they have to be comply with the Due Diligence Act? For example, the token generator. What he is doing actually, he's providing software. He is actually really providing the technical solution or the infrastructure. So you don't need an infrastructure provider, as the way we defined it, to have the Due Diligence Act applicable. So it is a balanced approach between fostering innovation, providing legal certainty, but on the other hand having a very strong KYC, AML, and sanctions regime applicable. So if you look at the token depository, sure, the Due Diligence Act is applicable. If you look at the token issuer, so if you issue token and if you provide it to the public, it is applicable. Another very crucial role is the physical validator. He's building the bridge between the real world and the digital world. So yes, for sure, you have to know who is transacting here. And coming back to the question of the exchange, sure, the TT exchange service provider, also the Due Diligence Act is applicable. So you see some other requirements, as Aviya already pointed out, that we have minimal capital requirements, all of them have to get registered. So we really try to find a solution where we think it is a balanced approach. And therefore, we can state that the Liechtenstein approach already takes the Fifth Amendment of the AML Directive and the FATF recommendation into account. We're not only regulating exchanges and the custody of tokens. So we analyzed all of the service providers we actually invented. And full KYC, AML, and CFT procedures are applicable. So it is a risk-based approach, as we have it in our Due Diligence Act for the standard service providers. We already talked about the SDG 16. I think I don't want to spend a lot of time there because we want to have questions afterwards. I want to talk a little bit about the challenges. Give me just 1 minute to talk about challenges. A lot of people think that with blockchain, you're not traceable. It's not possible to actually to really have law enforcement there. This is true for some technical solutions, but it is not true for every technical solution. But that's actually a very big challenge. So on the other hand, you have like success stories. Lately, you have a success story that it was possible with chain analysis software actually to track people down because they used an exchange at some point in time. And the good thing is this technology never forgets. So whatever you do, if you identify one person, he can like easily transfer his transaction record. So I think that was it from my side regarding the due diligence.
Thank you so much, Thomas and the rest of our panelists. A very rich menu, and taking the floor. First speaker.
Thank you, Christian, for this event, and it's a great opportunity and great to bring blockchain in United Nations. Those who know me, I'm a proponent of blockchain, of artificial intelligence. SDG 16 was mentioned several times, and we've adopted this SDG 16 particularly in my country, because it's not just one of the SDGs. It really gives you the possibility to have good bureaucracy, good governance that has a cross-cutting effect on a range of other goals that one has to achieve. I want to thank for the act. I'm not surprised that Liechtenstein did it because of your attitude to rule of law, and it's so fundamental. And the question would be, what would be next? Whether you are thinking about working with others to expand it, because it's good that you have this blockchain act, but we need to have something similar in every, well, first a group of countries and then hopefully worldwide. But to tell you a little bit of of the practical experience that we have in my country. Unfortunately, at the time, I found the invitation pretty late because of so many things. Otherwise, I wanted to bring two personal friends of mine, one who was actually the champion who started the blockchain in Georgia, and the other who owns, I think by now, 3 crypto factories, and we happened to be pretty high, which was surprising to me in terms of crypto mining. I mean, we can't beat China, which is number 1, but after that, it seems that we're doing pretty good at that. What we did, we came to know blockchain around the same time, 2016, but already starting from 2017, because of the enthusiasm of 1 or 2 people, we adopted nationwide blockchain as a registration system for property to start with. Now, since February 2017, more than 1.5 million property registration acts have already been performed through blockchain. So it's now customary when you register your property, or you buy your property, or you sell your property. The system works as an add-on. One is our national registry through the Ministry of Justice, so it's go through the usual old system, and it's trackable. You can see it online, it's transparent, but simultaneously, the special code or hashtag or dummies, whatever, which is attached to blockchain to that transaction, goes through the system, and will work with BitFury in this particular case. And through that system, over 1.5 million properties have been registered. Now, that eradicates completely corruption, which was our initial goal. It is impossible to tamper with the transaction. And the reason is that every new transaction involves a new tag, and that means that all other tags need to be somehow changed if you artificially tamper with that transaction. So the change goes on, and it is practically impossible to tamper. Therefore, fraud is 0, and the digital signature is there, and you cannot hide. The transparency is right there. I mean, that was the first practical phase that we did. After that, we moved to the second one, the trust contracts. And every transaction today, nationally, that is related to movable or immovable property that needs a registration after, is through blockchain. Now, what that means in a dummy language, to make it more understandable, is that when you exchange the property, and you also exchange money or assets. Now, the registration and the exchange happen simultaneously. So money won't leave your account unless the property is registered, or if something wrong, I mean, it automatically will go back. So you no longer have somebody who acts as a clearinghouse. The two are working together because in the system we combine the banking, we combine the blockchain, and of course the government. In our case,